Oh man, Donald Trump fires shots at Jerome Powell after his FOMC performance. Markets here are starting to give up some of the gains after the excitement from yesterday. I'm going to break down exactly what's going on and why this market is such an important knife edge right now. It's really important you're following the data. It's not an easy market to follow, and there's a lot of people leading you astray. So make sure you're tuned in to what's going on. If you like these updates, smash up likes. Do not forget subscribe. Loads to get into today. We're going to kick off with Trump firing shots at Jerome Powell. If you haven't watched my video yesterday, go watch that one. It's still relevant. Go click it. I'm going to link it up here for you to go watch. Most people online yesterday in the crypto space got the Jerome Powell meeting completely wrong. Completely wrong. I made the video to explain exactly how I read the Jerome Powell FOMC meeting, and I was not bullish from it. The market was rallying, but in the midst of that, I uploaded the video to say, guys, there's a problem here, right? The data is not telling us this is a bullish moment. And now we're starting to see more data to affirm that this period is not just going to be fleeting, but it could be a little bit longer term. Take a look at this tweet from Donald Trump on Truth Social. He says, the Fed would be much better off cutting rates as US tariffs start to ease their way into the economy. Do the right thing. April 2nd is Liberation Day in America. Very powerful statement, and it's the timing of the statement that's very important, because this was right after Jerome Powell coming out yesterday, deciding to pause the interest rate hike, deciding in the summary of economic projections to not price in any more rate cuts for this year. He kept it at the 2 that was previously projected from December. That is despite him revising down the GDP figures, revising up the inflation figures because of the tariffs taking effect in the global tariff war right now. And that led me to make the video yesterday saying, guys, this is giving me stagflation vibes, where the economy is dying, inflation's going up. It's not a good place to be as far as the economy is concerned. The market at the time yesterday was rallying, but you're seeing now how it's giving it up. Take a look at the S&P here today. The S&P on open just started tanking, right? It fell. Big 3 hourly candles to the downside here. And then we got some good economic data, which I'm going to cover off, which led it to rally a little bit, and then it's kind of giving it up again and trying to get some footing here. If we take a look at Bitcoin as well, take a look at Bitcoin. I mean, yesterday, you saw, this is the hourly chart, right? Just giving it up over the last kind of couple of hours here. 1.7% 3 hours ago, the last hour 1%. And really, if I jump this over to the daily chart, you'll see yesterday was buoyant, up 5%. Today, giving up 3.3% already. Cannot get above this daily EMA ribbon. The bears continue to be in charge. I'm going to do a little bit of TA shortly. But let's go into what's going on, right? So if you look at the US jobless claims which have just come in, they showed few private sector layoffs. So this has given the market some confidence that, oh look, the job layoffs aren't as bad from the Doge and what Elon Musk is doing with Trump, laying off all these federal workers, and also the tariffs aren't taking too much impact yet. There was also some good real estate sales data which was showing that the economy was still healthy as well. Markets are deciding to take that in a little bit of a bullish manner. But really, when you look at the extent of it globally, right? Globally, central banks are starting to take caution. You had the UK central bank come out today and say equally that, look, there's more uncertainty in the market. Jerome Powell in his meeting yesterday continued to mention the word uncertainty umpteen times, saying, look, we're in an uncertain market. We don't know. He did say inflation was transitory, right? He thinks it's going to come and go. But the reality is Trump is doubling down. He's not backing out of this tariff stuff. He's saying April the 2nd is Liberation Day. Cut rates now. And the question now is going to be, you know, like when you watch my video yesterday, I said, guys, there could still be a period of pain. But the pressure is now going to start piling onto Jerome Powell. Jerome Powell's going to have Trump in his ear. He's going to have the pressure now to not damage this economy. His next meeting is on May the 7th. Okay? May the 7th, which means from now, the rest of March, plus all the April data that's going to come out, he's going to have the pressure of looking at that data and deciding whether to cut. Now, the bullish news for us in terms of the market is there is historical precedence to cutting quickly. Once he decides that we're about to hit an iceberg, Jerome Powell will cut fast, right? But at the same time, when he's cutting fast, and by the way, that could mean a 50 basis point cut, which we saw last year. Well, yeah, we've seen him do that before. Maybe even a 100 basis point rate cut. Right? It's possible. And when he starts to cut to that extent, that's when you're going to start seeing the easing of policy. But I don't even think we're going to get a pump in that moment. I think that's the moment where the market's going to go, oh, wow, you're right. This is having a real impact on the economy. It's not as transitionary as we thought. Like, there's a problem here. Otherwise, why would Jerome Powell and the Fed be cutting so frantically, right? You're not ahead of the curve anymore. You're not in control of landing this aeroplane. You're kind of being reactionary now. So you'll get a little bit of a dump if that panic happens from Jerome Powell. Like, if between now and, before May the 7th, which is 6 weeks away, he may decide to have an emergency meeting. Jerome Powell and the Fed may decide to have an emergency meeting because the data worsens, the tariff war continues to reap havoc through the US and create global uncertainty, and maybe they decide to pull the trigger. Maybe he does an emergency 50 basis points because he cannot wait 6 weeks. So this was a really important meeting. You can already see from Trump's rhetoric, he was expecting a cut. He thought at least maybe 1 or 50 basis points cut, and he wanted that, right? He needs that to ease the burden of what he's doing, because he's saying, look, I'm not backing down. There ain't no U-turn from me. I need to push through with what I need to do. And in this, tweet on Truth Social continues to double down on that. He's not just saying, oh, this is going to be one day I'll wake up on a Monday morning and say, oh no, just kidding, we've U-turned on the tariffs. No, he's pushing through. April 2nd, Liberation Day, right? He's starting. And so this is now the situation we're in, where we could wake up one day after a period of the market deteriorating over the next kind of few weeks, and maybe Jerome Powell steps in and says, enough is enough. The data is bad. I need to cut. Even though the next meeting's in 6 weeks, I just need to get ahead of the curve, maybe have an emergency meeting, an emergency cut, just because it's such unprecedented times right now, okay? So that's what I'm planning for here in this market is, I said it yesterday. I was not buying it yesterday, right? Bitcoin went as high yesterday as 87,000, but I still made the video say, guys, I don't buy this pump, right? I don't feel like the meeting from Jerome Powell warrants us pumping. What will warrant us pumping is a loosening of monetary policy, but over time, not immediately. Like I just said, the first time Jerome Powell panics and does his 50 basis points, 100 basis point cuts, the market's not going to take that positively. It's going to be like, uh-oh, what's happened? Why are you doing an emergency cut? What's going on? Are we in bad shape? Are we in a deep, lasting recession, a painful one? Because that's where this could head if Trump is hard-headed with the tariffs. If Trump decides to really go deep with these tariffs, 25, 30, 35, 40% tariffs, we live in a more economically connected world than we've ever lived in. If he thinks this is, going back to the 80s or even any case studies he's done from before then, he'll be very mistaken, because the world's different. Even though you have a US company, the component parts of that company, let's say, I don't know, Apple with the iPhone, where do you think all the parts are coming from? All the parts of these phones and all the gadgets we have, they come from so many different places. So putting a tariff on a couple of countries impacts even US companies, right? And so when you start to feed that through, that's going to have an impact on jobs. On top of that, he's cutting all the federal jobs in a market where are they going to go get new jobs, right? This is all going to have an impact on the US economy. So markets are worried about that. That is why we're a little bit risk off. You can see the dollar index is having a strong day today, which normally shows you that there's uncertainty in the global market, trying to hold support here around this red box, which we had drew. This is an important moment, right? We need to monitor it. For me, I'm just ready to buy the dip. If we head down to 74, which I said for a while, 74, we did wick down close, right? What did we get to exactly? When we wicked as low as 76.5, again, previous all-time high is at that 74 level. I wouldn't be surprised to see us want to come down to that levels. Let me just check these liquidation levels live with you guys just to see if there's any relevance in this chart. Let's jump on over to the 3-month chart here and just see if, look, the liquidity is building up, right? You can see why the market is excited. The market's excited because there's a lot of people shorting. The problem is not always that straightforward, right? It's not always that straightforward that just because everybody's shorting, we're going to go liquidate them and move the price up. No, sometimes they're shorting for a reason, based on the economic uncertainty, based on what's going on, based on the data we got from Jerome Powell and the projections we got from Jerome Powell. So, when you look at this, at some point, I do still think there's going to be an explosive move to the upside. I just think we got this opportunity to accumulate and maybe even a little bit more of a pullback, right? Maybe just a bit more. Maybe we do want to go back to my yellow line, which would give us another 13, 14% here on Bitcoin. And again, I want to be prepared to buy the dip there, not just on Bitcoin, but all coins, because all coins will get wrecked if that happens. You can already see in the market, Bitcoin is down 3.5% today, but many of those altcoins which were excited yesterday are starting to fall back into the red, of course, right? They're still just following Bitcoin's lead, but ultimately, Bitcoin is following the lead of the wider global market. So, right now we are not in a crypto-specific market. There's no news that's going to move crypto. You've seen all the best news come out for crypto. Right now it's bigger than that, right? It's not about you tweeting that Ripple won its case. It's not about you tweeting there's a Bitcoin reserve. It's not about having a pro-crypto US president. It's not about having the Bitcoin halving, which is behind us, and having Bitcoin spot ETFs, Ethereum spot ETFs. These are all the things that are the bricks of the foundation. Now we just need risk on. Now we need stimulus. We need money flowing in the economy, just like in every bull cycle. This is no different, and we will see crypto move. So I'm looking at this as a nice, patient approach to continue to get those nice, juicy nibbles, allocate, build my portfolio, and we'll look back in 6 months, 1 year time when they start cutting those rates and really getting down to those low interest rates. And eventually, we know they're going to do quantitative easing. Central banks can't help themselves, right? Every single time they've done that, they print money because they don't know any other way to fix the economy when they break it. And then they'll repeat the cycle again. Hopefully you found this useful, guys. If you like this type of update, smash some likes. Do not forget to subscribe, and I'll see you in the next one.